What's up, everyone? Welcome back to the trading world. Today is August 21st, 2025. It was a Thursday, and we're going to be going over all kinds of trades you could have taken in the NASDAQ futures market in just a second. But first, I want to talk about discipline. And, discipline's something that I've gotten a lot better at compared to like 8 months ago, where like I can handle a loss. I take a loss, I get off the charts. That's it. It's there's no arguing with it. I take a loss. I messed up. But a different aspect of discipline that I kind of forget about sometimes is it's not just discipline and accepting a loss. There's other parts of trading that need to require discipline, and one of those things is accepting that you're not in a good mental state to place a trade. Like, I should not have taken a trade this morning. I wanted to, but you can't. Part of being a disciplined trader is accepting that if you are not in a good mental state, don't touch these charts, because, guys, we are trying to do one of the hardest things in the world. If we are not in our best mental state at the time we're clicking that buy or sell button, we are doing ourselves a huge disservice. We're shooting ourselves in the foot. I mean, genuinely, we're trying to do something so hard, and we think we can walk into the market when we are tired, feeling like crap, and make the best decision we can. I mean, yeah, I'm getting better. I've gotten way better at handling losses, but I still got to work on this other. There's so many sides to discipline. It's such a deep thing, and there's so many different ways you have to figure out how are you going to be disciplined, because it's not just one thing. There's all kinds of things. And for me today, I learned I really need to work on the skill of disciplined understanding of my mental state and whether it is in the optimal state to be taking a trade. At the end of the day, right, that's going to prevent losses in and of itself. So I just want to talk about that. I think that's important, but let's go ahead and get into the market recap. I didn't have a ton of time to review the market today. As you can probably tell, I took a loss. It wasn't, in the moment I thought it was okay, but it wasn't as great of a trade as I thought at all, to be honest. And you know what? It happens. It's life. But I'm up 2R still this week, which is pretty cool. And yeah, I'm going to be going over all kinds of trades you could have taken. It's crazy because these markets, guys, they are constantly giving us opportunity. And it's just up to us as traders to be aware and focused in the moment to catch those opportunities, because it's not like they're not there. They're happening, guys. They're happening all the time. Go watch my live stream I just did where I reviewed the market. We just got to be able to take advantage of them. So first, let's talk about what I was looking at in the morning. Actually, I'll talk about the trade I took in the end. But essentially what I was looking for is I was looking kind of to see a rejection block and to see SMT off that rejection block. Because if you guys don't know, that's the Phoenix model, where when you get SMT with the rejection block, you can see with this low here, there's SMT. That's going to be the very bottom or top of a market maker model. The very bottom or top of a market maker sell model or a market maker buy model is usually, a lot of the time, it's going to have the Phoenix model. It's going to have a rejection block and an SMT. So the regular Phoenix model is you just enter at the rejection block. There's another version of it where I enter at the midpoint of the rejection block. If you guys don't know what a rejection block is, by the way, it is the wick of a swing low or a wick of a swing high. So like this would be a rejection block, for instance, right? And you can see the market pushes up into it. I guess this one would be better. Pushes up into it and rejects, right? Anyway, Powell Trade uses this, and he a lot of times tops ticks the market, and the way he does it is you just enter at the rejection block. That is literally the Phoenix model, and you can even enter at the midpoint, and I call that the Phoenix Mini. Once again, all you need is a rejection block and SMT. But for me personally, I created my own adaptation of it where I like to see lower time frame confirmation, because entering right at that rejection block can be kind of scary. So I use the rejection block as my higher time frame key level, and then I look for a 1 minute change state delivery out of it. I call this the flow state Phoenix, right? So 15-minute rejection block, S&T. So now all we're looking for is a liquidity sweep and a 1-minute change of state delivery, and that's going to make this a flow state trade, right? Because all you need for flow state, if you guys don't remember what flow state is, it is literally liquidity sweep. You just got to have a liquidity sweep. You got to have a higher time frame key level, and then an aligned time frame change of state delivery. If you guys don't know what that is, go watch my video on market maker models where I explain that. But yeah, anyway, liquidity sweep here and 1-minute change state delivery. And guys, this was the optimal entry to go run these low resistance highs and then continue up to this high, right? This was pretty nice trade. I'm not gonna lie. This is kind of what I was going for. I just messed it up a little bit. I posted on Twitter the trade if you really want to look at the loss, but it wasn't that good of a trade, and it's mostly a mental state thing, right? So anyway, this 1-minute change state delivery would have been really good. Now, something that tripped a lot of traders up today is the change state delivery that occurred up higher, and that happens right here, and it actually looks kind of good, right? Genuinely, this looks pretty decent, but guys, I'm telling you, the market is always right, and there's always a reason for why the market does what it does. Smart money, they're not going to risk money on something like smart money is risking hundreds of thousands of dollars to $1 million on a single setup. Why would they risk hundreds of thousands to $1 million on something that they don't think is good enough? They're not going to. And I'm telling you right now, smart money saw this and they said it's not convincing enough. Why? Well, we're in premium, right? We're in premium relative to this high to this low. And to be honest, like, I do really like it. I'm not saying that I wouldn't take it because I'm a human being. There's a good chance I'd try to take this and it'd be a loss. But what I am saying is there's a reason for why the market does what it does. Pay close attention. This change state delivery occurs in premium. This one occurs in discount after a very nice sweep of liquidity, and we're delivering from a rejection block. That is way nice. That is way nice. So you can see this one. We go up and run all those highs. And then eventually we stop at these highs. We do not run these highs. And you know why? A big reason why is, well, we have an external gap here. There's a fair value gap right here that holds price down. And there's actually a trade off of this gap to the downside. And this is the trade I posted for my trade of the day on Twitter. You can go look at that if you want. But essentially, it's when you have, or no, what am I saying? I did post this as trade of the day on Twitter because I do think this is really, really nice. But essentially what we have is a 15-minute gap, right? I'm marking it out like this because I just, use common sense. Like, if this was all one candle, this would be where the gap would be. You can even mark it out like this. But anyway, 15-minute fair value gap. And then dropping down to lower time frame, we align a 15-minute key level with a 1-minute change state delivery. And guys, look at how every single time I backtest, I'm like, it just reminds me of how perfect the markets are and why I'm never going to give up with this. Because if this doesn't give you guys hope, like genuine, every time I backtest, it gives me so much hope because I see the market perfectly react off of levels like this, right? 1-minute change state delivery off a 15-minute gap. And it's just like, it's just so perfect. It's so perfect. Once again, what is this? What is this trade? So for those who don't know what's going on, right? We have a higher time frame key level. It's a fair value gap. It is definitely within premium of this range. We have a liquidity sweep, and then we have a 1-minute change state delivery. We go up, retest it. We actually induce this high into this fair value gap. And by the way, it's also a 2022 model, right? Because, well, we sweep out a high. We sweep out a high, liquidity sweep, break of structure, and then we come back to our fair value gap within premium of this range of price here. Well, it's not letting me make this 2022 gap. Let me try one more time. But like, guys, genuinely, every single time I back this, it's like, this gives me so much hope. Like, guys, these markets are perfect. They're moving off of smart money concepts, and they're never gonna stop. We just gotta lock in. It's up to us. It is up to us. We can do this. From high to low, measuring this whole leg out. Bang, bang. You can see the fair value gap is within premium, making it higher probability. If you guys don't know what 2022 model is, go watch my video on it. I explain it. Anyway, we push up into that 2022 gap. We induce this high. We get 1 minute change state delivery. Anyway, I would take this as simply retest the 1 minute change state delivery. Maybe I would even wait for us to induce that high into the fair value gap. Stop loss, usually I'll do it at the end of the wherever I measured out standard deviations. Here, because it's a 2022 trade, you could probably have the stop loss a little bit lower. And then you can see if I measure out standard deviations from the end of the body to the bottom of the body, we go perfectly down to the second standard deviation and then perfectly down to the fourth standard deviation later on. Personally, I would take all off at the second standard deviation here. I think that would have been a very nice place to take profit. I don't see any reason to hold it past that because, well, this is kind of the end of the consolidation and this is a gap. So I'm not really anticipating us to break this on the first go. So I would just go all off. I would probably scale out. But once again, you can see this is, wow, that's like 3.5R. If you want to get even more precise, right, you take that 1 minute gap and you drop down to a 5 second chart. And you take a 5 second change state delivery off of that 2022 gap. I call this the 2022 plus, where you just, break down time frames and get down to an even lower time frame and take an even more sniper entry. So 2022 1 minute for value gap. Don't believe me? You can take a 5 second change of state. Well, check this out, right? We can drop down to lower time frame. Wait for an obvious change of state because once again, I personally am not going to enter. If I'm an institution, if I'm a big money trader, I'm not entering if it's not obvious. It needs to be obvious for me. For me, this is where the obvious change of state delivery happens, when we get this violent close below this old low here. So that's change of state delivery on the 5 second. When we get that, it's very, very obvious we're going to go run these low resistance lows here and then continue lower. And so if you enter on that close, so once again, 1 minute key level, 5 second change state delivery, I enter on the close here. Stop loss for me, since I'm entering on the close and we had amazing momentum, I'm putting stop loss at the end of that wick. And then you can target that lower resistance liquidity. You could, keep runners if you wanted to. And if, let's say you did target that second standard deviation, wow, that would be a 6.6 to 1. So guys, there's so much opportunity in these markets, and it's like, it is genuinely just up to us to lock in, and it's just a matter of time. So once again, accumulation, right? You see this is a giant accumulation range, manipulation, and then we are just getting ourselves on side with distribution down to that low. And then let's see what else. Yeah, there's probably a lot more trades that happen later on, but I just didn't have a ton of time to review the market in super detail today. We do get this inverse value gap, so maybe you take this inverse value gap. For me, I'm really liking flow state a lot, but that does give us an inverse value gap there. Oh, one other thing I'm going to mention, right? As we always talk about, that first for value gap. It's always nice to look at what happened today with that. Well, we got it right here. This was the first for value gap. Why is this one not? Because this one includes the 929 candle. It has to start, the sequence of 3 candles has to start with the 930 candle. So there we go. Here's the first for value gap. And notice how important it is to understand, I remember some people asking me, why, what is the point if you say it could be respected or disrespected? That's basically saying nothing. It's because it matters what the drawn liquidity is, right? Here, we actually sweep this high, and this low was the drawn liquidity. There was just so much consolidation below here that once the market breaks through, this is a way higher probability short than this long was. Once again, if you're an institution, if you're risking real money on these markets, hundreds of thousands of dollars, you're not taking something that's okay. You're taking something that's undeniable, right? When we break through this and retest this first for value gap, it's undeniable that there's going to be stop losses at this low. It's undeniable. You want something that's undeniable. So rejection of that first for value gap. So what do we do with that? We line it with the 5-second. And once again, I like to wait for it to be an obvious change state delivery. If it's not obvious, it is a waste of my time. It's not worth taking. So we push up into that first for value gap. Bang, we hit it. You could take this one. This ended up working out, but I'd wait for this violent close here. At that point, it is very, very obvious that we're going to go run liquidity. You can mark the change state delivery out like it with literally any of these bodies here. And yeah, change state delivery. We enter on the close. Once again, when I enter on the close, I don't necessarily put stop loss all the way high, and we go right down to that low. Bang, 2R. Even if you put it here, it'd be like 2.5R. And if you entered on the retest, man, yeah, that'd be crazy. You could even take profit at these low resistance lows here. But like I always say, guys, there's a million ways to trade these markets. These markets offer so much opportunity. It is just up to us to identify that opportunity and keep locking in. And with that, hopefully you enjoyed this video. I will see you in the next one. Peace out.